Hello, my name is Siraj Sate, and I'm a senior at East Greenwich High School.
Hello, my name is Brant Way. I'm also a senior at East Greenwich High School.
And together, we're here to pitch Thermo Fisher Scientific. Let me go check out how my college fund is doing. Oh no, the market is down. How am I going to be able to pay for college? Let me call my financial advisor. Ring, ring.
Hi, this is Brant Way at BlackRock. How may we help you today?
I need a stock that can help me pay for my 4 years of college right now.
Well, we have just the perfect stock for you. Thermo Fisher is a world leader in serving science. A leading manufacturer of laboratory technology, Thermo Fisher's extensive delivery capabilities and powerful consumer network have attracted over 400,000 customers. By employing both business-to-business and business-to-consumer models, Thermo Fisher meets the needs of research facilities worldwide. Thermo Fisher operates in four main areas: laboratory products and services, life sciences solutions, analytical instruments, and specialty diagnostics. These areas include products such as reagents, genetic sequencing technology, mass spectrometers, and coronavirus test kits, respectively.
However, one can't properly understand a stock without the context of its industry. Thermo Fisher Scientific makes both laboratory disposables, which include pipette tips, and laboratory equipment, which includes gas chromatography. Together, the two segments contribute to the laboratory technology industry's 5.7% projected annual growth rate between 2018 and 2025. And as developing nations only continue to become more disease aware and consequently began to demand more laboratory testing, that growth is only forecasted to increase.
Although the industry's annual growth of 5.7% cannot be attested to one company, Thermo Fisher has played a major role. A large reason for this is because of its incredibly wide economic moat. Comparable to the moat of King Arthur's Camelot, Thermo Fisher defends its profits with three main protections. The first is a vast product line, which only keeps increasing as Thermo Fisher adapts to the needs of its customers. Next is a dominant market position, which Thermo Fisher has established through strategic acquisitions and partnerships. The third is stable, recurring revenue streams that allow Thermo Fisher the financial flexibility to function effectively as a company.
Since there are only a few companies, but many suppliers and customers in the laboratory technology industry, we believe that the bargaining power of customers and suppliers is low. For this reason, we also believe that the intensity of competitive rivalry is low, as well as the threat of substitutes is very low. Moreover, we do not believe that the entry of new companies is any threat to Thermo Fisher. This is because the barriers to entry within the laboratory technology industry are very high, as the industry is highly dependent upon human and physical capital.
I don't know about you, but I'm very fond of nursery rhymes. So when I think of Thermo Fisher, one song keeps playing in my head. The wheels on the revenue bus go round and round. It's not random. Thermo Fisher is incredibly powerful in generating revenue. The drivers of this revenue bus include innovation, scale, and acquisitions. Thermo Fisher Scientific is developing products with unprecedented levels of accuracy and convenience, and has established a presence in new markets in the Asia-Pacific region. Additionally, it is well positioned to maintain its profit levels during the coronavirus pandemic because of the increased infectious disease testing capabilities it gained from its acquisition of Qiagen.
Now, for what you've all been waiting for, the money. Focusing on the key metrics of profitability, growth, and liquidity, Thermo Fisher excels in all three categories. With a 44% gross margin, a 15% net margin, and a 13% return on equity, it is abundantly clear that the company has optimized their pricing and cost models. It only appears that they will continue to do so in the future, as we project that the company's revenue will grow by 8% annually for the next 5 years. Even in situations of financial hardship, such as the current recession, Thermo Fisher is well poised to deal with its outstanding obligations, for it possesses a debt-to-EBITDA ratio of 2.2, as well as a current ratio of 1.9.
I know projections aren't the most fascinating things, but there's a few that we really want to call attention to. Thermo Fisher has a 24% upside potential compared to the measly 8.1% of its competitor Danaher. Moreover, Thermo Fisher also boasts a 27% EPS growth, while Danaher can only claim 8.1%. Together, these two factors indicate that Thermo Fisher is a favorable investment, and coupled with a PE average that is comparable to its industry average, it looks to be a strong competitor too.
Now, companies aren't risk-free, and sadly, Thermo Fisher is no exception to that rule. Given the need for safe and secure laboratory technology, it is possible that regulatory compliance issues may arise or class action lawsuits may emerge. Thermo Fisher also relies heavily on its distributors to deliver its products to consumers, so a disruption in their distribution network could lead to financial harm. Equally concerning is the constant need for technological innovation. Bottom line, if Thermo Fisher cannot adapt to meet the current needs of its customers, then its sales will plummet. However, by building new partnerships and maintaining a high code of ethics, as well as supporting an ecosystem of entrepreneurship, Thermo Fisher looks favorably cushioned to withstand future risks to its profitability.
Overall, the DuPont analysis between Thermo Fisher and Danaher, a similar-sized competitor, confirms the superiority of Thermo Fisher. Although Danaher has a higher profit margin than that of Thermo Fisher, it has a lower return on equity, mainly because it has a lower asset turnover ratio. Since Thermo Fisher has low leverage, its return on equity is more sustainable and is thus the better investment.
Recognizing that Thermo Fisher is the better investment, it's important to quantify by how much. That is reflected to us in one magic number, the target price of $407.60.
As Thermo Fisher's current share price is $328.70, this target price signifies a strong buy. Beyond the quantitative analysis for this target price, the qualitative analysis also supports this figure. Thermo Fisher Scientific has a strong foothold in emerging markets, widespread brand recognition, high profitability, and a smart acquisition strategy. As companies become more developed, they will be more able to invest in healthcare, which will increase the demand for laboratory technology. Additionally, the company's industry-leading brands include Thermo Scientific, Applied Biosystems, Invitrogen, and Fisher Scientific. And the company's revenue, net income, and earnings per share have all increased annually for the past 5 years. More importantly, the company has recently acquired a pharmaceutical ingredient manufacturing site and a viral vector manufacturer in its quest to become a one-stop shop for laboratory technology.
In one final effort to convince you, we would like to share a quote that exemplifies why we chose Thermo Fisher Scientific. The key to success is consistency. And in all aspects, Thermo Fisher has demonstrated remarkable consistency. With both sustainable and significant growth, it has and will cater to the needs of citizens, corporations, and governments worldwide, extending its profits into the future and beyond. Thank you.